Okay, let's begin. Note that attendees join the webinar in listen-only mode, meaning you have been muted. So Front Row provides insurance and risk management consulting services for the entertainment industry. We operate out of 7 offices across Canada and the US. Our senior account executives have 20+ years of experience providing expertise wherever and whenever needed. Front Row specializes in providing insurance for a number of sectors, including some of the examples that you see on the slide here. I'm Grant Patton, VP of Marketing at Front Row, and I'll be your moderator for today's webinar. A bit about myself. About 7 years experience in the insurance industry. I worked previously at CSIO, which is an insurance industry member association, in a marketing role, and I joined Front Row last year. I am a graduate of Ryerson and U of T. Steve Beatty is Canada's acknowledged insurance expert for the performing arts with nearly 30 years of experience providing guidance on board management liability, production, and venue insurance. He's known for initiating some of the most innovative insurance programs in the arts, from Act 1 to Solo and the production Pact Bond program. It's no wonder the largest contributors in the Canadian arts scene, as well as individual producers of music, theater, dance, and opera, trust Steve with protecting their artistic vision. As an active board member with a number of performing arts organizations and a guitar player himself, he truly understands what it takes to survive in Canada's cultural landscape and has spent his career educating and supporting those working in the arts. Rob Gugg came to the world of arts and entertainment insurance 10 years ago after 6 years as a commercial insurance broker. It was a welcome return to the creative interest that inspired him to study animation at Sheridan and film and TV production at Humber. Rob is a talented artist, and his firsthand knowledge of both arts and insurance has made him a go-to advisor on production and board liability insurance for live performance companies across the country. As a senior account executive at Front Row, Rob is a trusted advisor to many performing arts and arts education clients, helping them manage the day-to-day risks of their operations. Right, so a little bit of housekeeping here. You can ask questions whenever you'd like, and we'll answer them throughout the webinar. And also, we do have a slide at the end where we will specifically answer them as well. If you do have questions, just go ahead and type them in the questions pane found in the GoToWebinar control panel, which should be displayed on the right of your screen. You can click the arrow at the top left of the control panel to move it in and out. Also, if you're interested, you can download a copy of these slides by clicking under the handouts drop-down. You can download a copy of the PDF slides there. And so just to provide a disclaimer here, the information provided herein is to be used as a general reference only and is not intended as advice for any particular situation. In all cases, actual coverage is subject to policy language, terms and conditions of the long-form policy documents issued by the insurance companies. And with that, I'll let Steve and Rob take over.
Thanks, Grant.
Thanks, Grant. So we figured we'd start off just with regards to our sort of agenda today. So here are the learning goals for today's webinar. Who's at risk? Where do claims come from? How you can protect yourself and others and your organization, things to think about when reviewing your own insurance, and Theatre Alberta's Management Liability Program. And we thought it'd be fun. Here's a word cloud, which we're fairly certain that the large majority of you have probably seen a large number of these words. They're buzzwords in and around insurance, but also very relevant to your day-to-day operations.
Thanks, Rob. So it's Steve now. The board management liability, when we think about this, an organization, whether it's a society, a charity, a not-for-profit, is a legal entity that requires individuals in order to look out for it. The individuals will be responsible for fulfilling the organization's mandates, doing the planning, both short and long term, managing their financials and their other assets, managing the other individuals that are involved in the carrying out the services or the activities. And then obviously all of those individuals need to act with a sense of good governance. And by good governance, we mean acting in good faith, being honest, being loyal and obedient to the organization, making sure that it always has its best interests at heart. And then as individuals, they need to avoid conflicts, to avoid situations where board members may be perceived to have or actually have received some sort of personal gain, or that they may be steering a decision in a direction that is in their own self-interest. So these are the things when we think about the individuals that they need to go in and think about.
So here we're discussing some of the statutory liabilities. Steve and I had discussed this. I mean, across Canada, there are probably in excess of about 200 plus federal and provincial legislative bodies that could govern your board of directors or your organization. Some of the most common ones that we see: Canada Business Corporations Act. You know, we're getting close to tax time, so Income Tax Act, Trustee Act, the Criminal Code. We'll discuss further on the bill C-45, the Westbury Mine, Charities Accounting Act, you know, just to name a few.
And the thing is, when you're looking at these liabilities, particularly these statutory liabilities, as Rob mentioned, there's hundreds of pieces of legislation that will actually impose this personal liability on directors, the executives of organizations, the individuals that are managing this. So when we think of these personal liabilities, we can see them, as Rob said, under statute. We can also see them as a civil tort being a wrongdoing, and these would be a civil lawsuit that could be brought against those individuals. Could be facing situations around criminal issues, and then all of the liabilities that get assumed under various contracts. Just putting a bit more of a point on this, the Canadian Revenue Agency, funding agencies, this is something that is not for profits and charities. Obviously, various levels of government funding come into play to help organizations meet their mandates. And it is an exposure every time you take in public funds, and you're then obviously required to spend them in a certain way. You have to demonstrate good fiscal management. And this, again, if something goes a bit sideways, can all of a sudden present the individuals with a personal liability. Obviously, claims by employees, we're going to expand on a lot of these things, but claims by employees, volunteers, these can be things around workplace harassment, just general employment matters like termination, harassment, failing to promote, all these different things. Rob mentioned Bill C-45. That's actually under the criminal code, and that related, and it came out after the Westbury Mine, where there were directors criminally charged with the situation there where workers were killed in an explosion. And then again, to mention the assumed in a contract. And the organization, your organization, is going to be assuming many different liabilities under contract, and these are things that you need to be aware of when it comes to your own liabilities.
So duty of care, the care, diligence, and skill that a reasonable, prudent person would have exercised in comparable circumstances. It's a very common phrase that we use in regards to our day-to-day operations when discussing operations of clients. It would come up in the event of what would a normal person in the very similar circumstances have done. In the event of a claim, obviously, you were going to want to show that you provided a duty of care to the best of your ability in regards to any sort of wrongdoing or claim that had arisen.
And this really is the test that in a legal setting you're going to be looking at. You know, was adequate information obtained? Were the various facts and considerations weighed and discussed around the board table and within the executive? Again, was it what a reasonable person would do in similar circumstances? Now, there's always the fear that after something goes wrong, that it's always easy to be the Monday morning quarterback and say, hey, well, you should have done this, you should have known that.
Yeah, hindsight 2020, right?
Exactly.
So, yeah.
But the courts tend to use what they call the best business judgment rule. And it presumes that the director of the corporation acted on an informed basis in good faith and in the honest belief that the action taken was in the best interest of the company. So how do you establish that? You use the duty of care, you demonstrate that all the facts were considered and options weighed. And then a court won't necessarily look and say, well, because it had a negative outcome or not the outcome you intended, you made the wrong decision. That's not really what this is about. They just want to know that you've considered the facts and that you've done the best thing you can possibly do.
I think diligence from the previous slide is probably one of the key words. You want to be diligent in your understanding and your undertaking of making sure that you're using the best, I guess, care in order to protect your organization, their employees, and then obviously we'll get into that.
We do talk about it later, but I mean, if it's a case of getting in an expert to help you with establishing facts, if it's a highly complex legal issue you're dealing with, or you're looking at renovating a property, making sure that you get proper engineering, architects, that you're making an informed decision. That's the important thing.
So let's recap. Board of management people are responsible for looking out for the organization. The people are exposed to the outcome of their decisions when managing the organization, employees, volunteers, and other business relationships or stakeholders. As I had mentioned previously and from the previous slide, in all circumstances, you need to use a reasonable level of care and diligence. There's that word again. Liability is imposed by law from claims brought by government agencies, other organizations, and individuals. We touched on a few, but as we mentioned, there's well over 200 in regards to the government agencies and other organizations.
So where do these claims come from that we're talking about? Every decision that's made by the individuals in the organization, that is a potential exposure. Whether there's an allegation that was a neglect or a breach of duty, whether you made a mistake, whether you misstated something or made a misleading comment, these are all things that ultimately can form the basis of an allegation against you. Using funds, how did you use the funds within your organization? Donated property, restricted funds. If you have a foundation or you have property that's only supposed to be used for specific purposes, you need to make sure that you abide by those rules that were within your organization. Hiring people are a big exposure every time you get into these things, and whether it's a volunteer, whether it's an employee, a freelance person, anybody working within your organization or for your organization presents you and the organization with a potential exposure. Government agencies form a large number of claims against not-for-profits, public funders, private and corporate donors, sponsors, students, anybody really who's coming into connecting with your organization is a potential exposure. So we're going to drill down on each of these in a little more detail as we go through the discussion today.
Insurance and managing risks. So here are a few columns essentially that every non-for-profit may have exposure to. We're not going to touch on everyone in great detail, but when in doubt, I mean, again, Steve and I are always here as a resource. We're discussing management liability today. Commercial and abuse liability in the performing arts is especially topical.
Hot subject.
Yep.
For sure.
Privacy and IP liability. So IP, intellectual property. When you're doing original work, we're talking copyright, trademark infringement. Privacy, of course. If you're collecting people's personal information, there are certain rules and regulations that you have to adhere to make sure that people's private information is kept secure. And then big hot button topic and issue these days are fraud and cyber related crimes. We're noticing from our side that social engineering and cyber related crimes are on the rise. Victims of these have found that the perpetrators are quite sophisticated given the social media aspects of most organizations these days.
So we'll start with the management liability, and we tend to spend a lot of time in this presentation on this, but because we are talking about this personal liability protection for directors and executives of the who are managing the organization. So what you'll find is that when we talk about the way insurance gets structured is they're designed to respond to a few different things. One is direct personal indemnity to the individuals. So if they do find themselves involved in a legal claim, an insurance company will undertake to defend them. The organizational liability, that would be costs that the organization incurs, legal defenses or settlement costs related to a claim. But also with an organization, in most of the, well, you'll see it in bylaws where they'll either have an affirmative indemnification clause or an opportunity to indemnify individual directors and executives. So what I mean by that is that if there is, up on the top line, the personal protection, if there is the need for a individual to incur legal fees to defend a claim, there's likely a provision in the bylaws, an indemnity provision that will say the organization will indemnify them, so reimburse them for costs that they've incurred in managing this claim in connection with the organization. You do want to look to see that the language there is affirmative, that it doesn't allow a discretionary decision as to whether the organization will indemnify. Either way, the policies will reimburse the organization if they've indemnified an individual. Employment practices, that's where we get into all of the
it's a big area.
Yeah, the claims with people. Third-party liability, very similar coverage as employment practices, a little different from the standpoint that it doesn't cover all of the types of claims we'd see from an actual employee, but third-party liability could be discrimination, harassment, defamation claims that might be brought by somebody such as a volunteer, somebody who's not an employee, could also be an independent contractor. And then fiduciary liability, that's if an organization does have a pension, investment, or retirement savings. And you know, with our work in the arts, we certainly have clients with those, but it's not the norm.
Yeah, it's a rarity, right? That
yeah,
places would have a pension plan or investment or retirement savings plan.
But if you have one, it does actually bring some exposure that we'll talk about. So I'm not going to go into too much detail because I kind of spoke over the last slides here, but this again is talking about the personal liability. And I think when you always look at any liability coverage, the key element to consider is the fact that it'll respond to legal fees. When a statement of claim comes in, there's an allegation made, regardless of the circumstances. You as an organization, as the individuals managing it, you need to be able to respond to that. And usually what that means is there has to be an investigation done. What are the facts and circumstances behind this allegation? And then what are you going to put up as your statement of defense? And with those, it's an expensive proposition. You're usually dealing with lawyers that are fairly, well, they are experts obviously in this area, so therefore the hourly rate is fairly high. And you want the proper defense. And
yeah, their expertise is going to be key in mounting your legal defense in the event of an allegation or even a claim.
And then the organization, same thing. Legal fees are crucial and critical in this. And then also the cost to settle a claim if it does go either through a mediation or perhaps into a trial and a court award. Rob, why don't you talk about the employment practices?
Yeah, so we touched on this briefly, and in our experience with management liability and board of directors insurance, we're seeing a large majority of claims arising through employment practices liability across Canada. We're touching on some points here. I won't go through every single thing here, but in the event that one of your employees comes forward with an allegation or a incident that they've identified to you, you can see a laundry list of examples here in terms of what sort of allegations can be made and how the policy would respond. As I said, employment practices are one of the largest sources of claims across Canada. I don't think that's specific to non-for-profit, but it's definitely one of those areas where the board of directors management liability policy would respond. Yeah, and we can easily discuss.
Yeah, and I think the bullying, like what we're seeing is there was in the performing arts, we've been involved in some fairly high profile harassment claims with respect to, you know, allegations against clients. But I think as well as talking to different experts, feeling is that we're going to see more of the workplace bullying, the toxic work environments, those types of things. We also find discrimination claims and human rights violations are definitely increasing. All of our insurance providers, our carriers, the insurance companies, I think would concur that they are definitely seeing an increase there. And the interesting thing about that is that a complainant simply needs to file an application with the Human Rights Commission to the tribunal. Whereas when that complaint is then delivered to you as an organization, you'll need to retain a lawyer in order to properly respond to that. Again, it's the investigation, figuring out what the facts are. And we always say those are like going to be $30,000 to $35,000 of legal fees just to get through that. And never mind if there's some sort of monetary settlement.
Yeah, we get into some claims examples later on, but previously it had been, you know, if someone was let go or allowed to leave the organization, it was a discrepancy over severance. Now it's become a lot more intricate in terms of other aspects of the employment practices.
Yeah, and as a sort of an adjunct to the to the employment practices, we mentioned this earlier, this third-party coverage, and this is similar types of claims, but discrimination, harassment involving people who are not employees. So in the performing arts world, this could be a claim that's brought by an independent actor, a performer, an artist, somebody who's attending a performance. Yep. You could have those types of claims. So we'll jump into some examples because this starts to get everybody's mind thinking a little bit in terms of the types of real life scenarios. And these are all based on facts and circumstances that have occurred. So
yeah,
Ross, you mind?
Yeah. This is essentially where the policy of the rubber hits the road. And an example here, a Canadian performing arts organization received a federal grant to produce a specific project. After the deadline for the final reporting passed, the agency notified the organization's management and board of director that they are seeking reimbursement of the funds as the project was never produced. The board of director has changed since the board of director at the time of the grant, but they are being held accountable. The board of directors resigns, but incurs legal costs to be removed from the agency's claim before a legal claim was initiated.
So this is an interesting thing because when we look at these types of insurance policies, you want to make sure that they're covering present, past, and future directors.
Yeah, they refer to it as de facto, but even as the board has switched over, you can see past operations or decisions made by the previous board are still being held accountable against the current board, even though that previous board had resigned, which is something I don't think a lot of board of directors might even consider.
Yeah, so you need that full continuity. You certainly don't want to have to be telling your insurance company about changes on your board. You want that to be an automatic thing. So as you're looking at the policy, it's important that you make sure that you know, it will respond automatically to those. Now, in this case, this example, we had a situation here where the board had actually resigned and was able to be removed from it based on the circumstances. But even though that current board resigned and was taken away from the agency's claim on the amount that had been granted for this specific project, there's no doubt that that past board, long after they'd resigned and were no longer part of the organization, are sitting there with an exposure that needs to be responded to. So it's an important thing that, you know, you may be done with the past, but the past is never done with you.
With you. Exactly. All right, so here's another one. A union worker brings multiple claims against a variety of venues alleging breaches of corporate policies and union rules, and that the worker is experiencing various forms of harassment. Millions of dollars have been spent responding to these complaints. Again, a very, very common, I would think, scenario for most management liability or in the performing arts for sure. Guilds, unions are not uncommon, especially in the performing arts. So I can only imagine like the final cost of this one, right?
Yeah, this because it affects multiple venues. It's an interesting thing, and what you basically run into in these scenarios, when it talks about corporate policies, it's talking about discrimination policies, harassment policies, and the like. So what essentially an individual is doing is saying that you are not, as an organization, enforcing what you've got as your corporate policy and your corporate culture. And that stresses here the importance of creating these policies, creating the way you want your company and your people to behave, but then also enforcing it. It can't be something that gets set up on the shelf after you write it,
True.
collecting dust. It really has to be constantly part of your
It's a
culture.
living document,
It is,
right? So
totally
I mean,
dynamic.
in this day and age, we're seeing a lot more specifics regarding, as you had mentioned, bullying, harassment. Those are all very topical issues, and especially in the workplace.
Another claim.
Yeah, it's all claims. A staff member is dismissed abruptly due to a complaint brought by an intern. The former member brings a wrongful dismissal claim which alleges discrimination and loss of future career opportunity. Organization incurs significant legal fees and financially settles prior to a court trial. Settlement's not uncommon, right? Sometimes if you
Yeah.
can mediate and settle,
Yeah.
we're going to get into hammer clause and details a little later.
Yeah.
But
Yeah,
this
so
again,
mediation is a typical way to go. So, which is actually, in my mind, a better way to go. I think it's more constructive in terms of all the parties involved. This claim brings some interesting things to think about, because so what you've got is a potential, you've got this complaint. Let's assume that that's a harassment complaint against an employee by an intern. So you've got that element of this claim to
yeah, there's
deal
a
with.
power dynamic
Yeah.
as well, right?
Power dynamic. You've got somebody who's subordinate to that individual. And then you've got this individual, the staff member, who's now feeling, okay, I've been wrongfully terminated. Maybe they feel there wasn't adequate investigation made on this claim, and now they've been dismissed. And we're working in a very small industry in the performing arts, so therefore there's a risk of
That reputation
that
or that,
reputational, yeah.
following them around.
And people do talk about these things. You really shouldn't. And I think that, what we're talking a lot with clients about these days are how they conduct investigations. How do you manage an investigation in as unbiased of manner as you
And
possibly
discreetly
can?
in some cases, right?
Yeah,
Because again, it
exactly.
could be an allegation,
Yeah.
and realistically in the court of public opinion, or at least in this
Mhm.
sector, it's possible that word could get around, whereas possibly no wrongdoing has taken place.
Yeah. So then you could be facing a defamation claim from the employee that's now been dismissed. So this, what is it? 6 lines of text actually opens up a huge
Sure.
potential claim that could be very, very expensive to manage.
So here's one from the Provincial Human Rights Commission. A volunteer had filed a complaint with the Human Rights Commission alleging age discrimination. The organization incurs $35,000 to respond to the complaint and agrees to a settlement. And then a second complaint is filed with the HRC when a family member's volunteer application is declined by the same organization. And yes, another $35,000 was incurred in legal fees to manage that complaint. So a couple of aspects here. It's essentially 2 separate claims, resultant from the initial claim sort of domino affected into the second one, right?
Yeah.
So
yeah, and that's it's an interesting thing, because again, going back to our previous example, it's how you manage each situation that will determine potentially what the next one was. So here they had a situation with one volunteer and then a family member then feeling that maybe this was retaliatory on the basis of the organization, perhaps because they had filed this claim with the human rights. So then they felt the second person. And even though we look at it and say, well, from a judgment standpoint, do we really want to have somebody working with our organization where we're dealing with a complaint, a human rights complaint? Probably not, but you really have to weigh out what as Rob said, the domino effect could potentially be in these circumstances.
a charitable organization, with the consent of the board of directors, entered into agreements with 2 fundraising companies. After complaints were received by a government agency, it is determined that 76 to 80% of the raised funds were going to be contracted fundraiser, and that the balance was not being used for the charity's mandate. The court concluded that the actions of the fundraiser were the actions of the directors. The charity directors and the fundraiser were required to repay $740,000 plus a penalty of $50,000 was levied on the directors. In my experience, I mean, again, most non-for-profit board of directors will start off with $1 million policy. So you can see with the total amount to repay as well as the fine, you're talking almost $800,000, right? So, and this doesn't even account for the legal fees, right?
Yeah,
Ultimately
right.
on top of,
That's a good point, because there would have definitely been legal fees. And this again is a situation where you go back to the duty of care, and were you looking out for the best interest of the organization by fundraising spending so much money on the fundraising services that you weren't even fulfilling any of your financial
Obligations.
so there's just a lot of, were these directors conflicted? Was there a conflict of interest? Were they looking at their own self-interest? These are all questions we can ask. But again, this is something where if you're looking and sitting around the boardroom table and you're a director where this is tabled as a proposal, as a director, you really have an obligation to question it, to drill down on it, to challenge it. And if you're not comfortable with it, obviously we'll talk about some board governance issue, but making sure that your voice is heard and you're registered in the minutes as opposing it.
With your concerns, yeah, absolutely.
Fiduciary liability, we talked about. This is good, the one about the if you have a pension plan, a retirement savings plan, profit sharing. Obviously, we don't really get into not-for-profit organizations, but these are the types of things where an individual who works with an outside professional advisor, a financial advisor, for instance, could potentially have a personal exposure if the participants in the plan are not happy with the results. In a pension, if it was short in terms of funds and contributions, these would be the types of things you could run into. The commercial and abuse liability is often referred to as commercial general liability. You'll hear that quite commonly. It's triggered generally by bodily injury. Could be mental anguish, emotional distress associated with a bodily injury, or then also property damage. These claims can come from a variety of sources: your own employees, your volunteers, people who are participating in some of your programming, perhaps going to a fundraising event. Alcohol liability is a big thing when we get into this. And all the programs and services, as you reach out into the community and you interact with the community, you are exposed to the outcome of that. The abuse, obviously, when we think about young people being involved in educational programs, this is where we do see some exposure for abuse. Very, very important to manage that internally with respect to how you're going to do background checks, your protocols and corporate policies around behavior, what's acceptable, what's not acceptable. And then, of course, visitors to your space. If you're operating a venue, if you're operating an event, anybody coming into there, you potentially have an exposure if they were to be injured. So we have a claim, Rob.
Yeah, so we'll get back to the claims. A performing arts venue served pre-show and intermission drinks to a patron attending a show. Prior to the show, the patron had been drinking at a bar. After leaving the venue, the patron visited 2 more bars where they continued to drink. In the early morning hours, the patron sustained serious injuries after a fall from a significant height. The patron brought a legal claim against the 3 bars and the venue, alleging they, the patron, had been overserved. So this, again, not uncommon in the performing arts. If someone were to pre-drink and then maybe go bar hopping, I guess.
Yeah.
Ultimately, all 3 bars were brought forward in regards to the claim.
So you see a chain.
Yeah.
You definitely see a chain.
And there's no way to really determine where was this individual, he, she, whoever was overserved.
Yeah.
All that's really known is that they were overserved, and then a resultant bodily injury claim ensued.
Yeah. And the greater likelihood really here is that they drank very little at the performance venue.
Yeah, in most cases, yeah.
They probably had a drink pre-show. They might have had an intermission. They had that drink, but then everything they did going in, everything they did after, and everyone who served that person then takes on this responsibility to assess their state of mind at the time. How much have they drank already? And this is one of these things where all of a sudden you're going to find yourself in a long, drawn-out legal claim. And what's interesting as well about this one is when we get into liability and the law and settlements, you're looking at something called joint and several liability, meaning that all of these, let's say liability negligence is distributed over all the parties in the chain of this sequence. Even if you as the venue are deemed to have 2% responsibility, you should have identified that the person had been drinking, whatever, 2%. If the other parties are unable to meet their obligation, then you will potentially have the exposure of the other 98% of the settlement.
Yeah, I don't think a lot of people realize that.
Yeah,
right.
You see, you've got this very small percentage of negligence, but you could be on the hook for the 100% if, for instance, the others don't have insurance, or they're underinsured, or they have an exclusion on their insurance that may prevent you from them from being able to utilize it.
So we had briefly touched on the crime, cyber, and privacy breach. As mentioned, we're seeing a big uptake in cyber crime. As social media becomes more relevant, more individuals, organizations utilize social media. And due to that, the criminals that we're seeing are becoming a lot more sophisticated and educated, and doing a lot more research with respect to, you know, individuals who may be on vacation, individuals who may have access to funds. And we're seeing here employee fraud. This is more internal, I would think, theft of money, property, expense, and billing fraud. But the cyber crime, malware, and ransomware, we're seeing a big uptake simply because someone may be in a rush, answering an email, opening up a spam. There could be bots
phishing
involved.
type email. Yep.
See a lot of those. And then also the social engineering aspect, which is somebody mimicking or using a false email address, pretending to be or mimicking somebody with board authority or somebody with executive authority, and then advising a subordinate or somebody who has access to funds, hey, transfer money over ASAP. It's an emergency. One of our vendors is asking for funds. Breach of network securities. I mean, again, we're talking firewall security. You know, every week it seems like we're reading something about Equifax or Sony or somebody else getting hacked and personal information getting distributed. And then there's also the accidental release of personal identified information. So it doesn't necessarily have to be a criminal act. It could be accidental.
Yeah, I mean, you're right. And, you know, we hear of people leaving laptops on trains or in taxis, and all of a sudden, all of this personal information is out there. And as a performing arts organization, you've got to think of if you're managing your own box office services, you've got all of that personally identifiable information. You've also got, you may have some confidential intellectual property that might be the property of someone else, that you're developing a show or you're doing something.
Or even employees, right?
Yeah.
You've got every employee's data, as well as where they get their, you know, funds deposited or their SIN numbers. It's a very serious area, and we're, again, as I said, we're seeing a big uptake.
And it's developing. Where, you know, Rob and I had attended a workshop on ransomware, and it was staggering to both of us.
The numbers
the
were
sophistication
insane. Yeah, just
of the
globally
organization.
as well,
Yeah,
right? So not just in Canada or North America.
So of course we have some claims.
Of course. An organization embarks on an exciting capital campaign to renovate their property. The project was funded by various levels of government, corporate and private donors. Working with minimal staff, the non-for-profit is unable to completely segregate project management duties and funds. By chance, a staff member questions an invoice paid to a company. It turns out to be a dummy company set up by another employee managing funds to steal money from the non-for-profit. Forensic accounting discloses multiple payments had been made. So this, again, is a rarity. It's not ultimately common, but there are some triggers that we've seen over experience.
Yeah,
right?
I from personal experience, when I look at a capital project, there's a lot of moving parts, and like most not-for-profits, understaffed, underutilized from a human, or under-resourced from a human resources standpoint. And it's very easy when there's a lot of invoices being paid and a lot of activity, if somebody does want to take advantage of the organization and you know, exploit this opportunity for their own personal gain, it's very easy to do that. And there's countless stories of individuals setting up these dummy companies, passing an invoice through, you know, that might be hundreds of dollars, might be low thousands of dollars, but enough that it gets through. And the thing with any of these dishonesty type claims is it's usually death by 1,000 cuts, meaning that they're small amounts, but they're enabled, because there aren't the stop measures to catch it, they're enabled to go on for an extended period of time.
Yeah, once you accumulate it over years, it becomes staggering, the amount. And then, you know, again, even when they discuss forensic accounting, third-party accounting services are always good for audits. You may notice, I mean, we've noticed for-profit organizations, if an accountant's there and very apprehensive to take vacation, it's typically around those areas where
like there tends to be some interesting profile type things that you'll see. A person who might be a perpetrator of an employee fraud, you'll often see these sort of similar behaviors because they're trying to manage a situation that they've created.
So another claim. A large theater serving several arts organizations experiences an unauthorized computer security breach, which forces a shutdown of their system. This prevents the purchase of tickets, and the breach presents the risk of unauthorized access to the personal identifiable information of buyers. It may also expose the private information of employees and contracted performers and artists. There are losses of revenue and costs associated with protecting their IT systems, as well as managing the potential risk of the data being used to exploit the accessed information. So this again is a bit of the snowball effect, right?
Yeah.
Is where once there was a shutdown or a breach, then it basically stops or prevents the purchase of tickets, which then could trigger multiple other aspects.
Losses of revenue. You know, there are costs when you have a data breach like this. You know, there are obligations under the privacy legislation that says that you have to put notification systems on individuals' credit, like basically credit monitoring
Registered
services.
mail in certain provinces, you have to send notified registered mail, which obviously if one letter costs $12, $13, times that by the amount of people you have to notify, it can get pretty
Well, that's the whole
staggering.
thing, right? Is that you could have a huge database of records of individuals. It's not necessarily just people that bought tickets this past season. It could be 10 or 15 years worth of individuals. So the person who bought a ticket 6 years ago, who's now living in some other country, you then need to comply with their local jurisdiction requirements and then monitor and give them so many years of protection. Sure. So these do snowball. And then there's the reputational side of it as well. Yeah. It makes, you know, your potential ticket purchasers, your patrons uncomfortable. And it just,
there's a lot of aspects here, right? Like there could be a lot of trigger points. Yeah. But you can imagine regardless, the cost would be pretty high.
So tying into more liability, and we're obviously talking about lots of great liability here, but when you're in the performing arts world, you are working with, in certain cases, copyrighted material where the intellectual property rights are held by another party. So that could be literary rights, it could be music that's being used in a production. You could also be commissioning new works to be done. So that's where we often think about plagiarism and piracy. So you commission a playwright to write a new work, a play or a musical based on, you know, what's supposed to be original ideas, and then you mount the production, and in comes a claim from somebody who says that was based on a short story I wrote in 1972. And all of a sudden they're looking for some sort of reimbursement, compensation, licensing fees. If it's a big success, then all of a sudden you could also have, you know, them wanting to be attached to revenue that's being generated. And then just getting the rights to use different names and people likeness and what have you in your productions. Defamation. Again, you have a play that's written and somebody comes out to say, well, that's a story about me, it's defamatory, and therefore I've been libeled and I'm holding you accountable. Again, you're going to end up with legal fees associated with all of these. And of course, some claims.
A charity engaged a music celebrity to perform at a benefit concert, but neglected to solicit the performer's agreement to perform and endorse the charity. In marketing the concert, the charity promoted the event, creating the public impression that the performer supported the charity. After learning of the organization's cause, the performer declined to perform and the event is canceled. The charity must refund the money raised and pay event expenses. While there was no legal claim brought by the performer, the charity sustained a significant financial loss.
So this is interesting here, where you've through an association, basically, you've implied the association with your charity. And this is either intentional, you know, poor communication, or somebody just didn't think about it.
You like to hope it's the latter, right?
But in the end, what you've got is a performer saying they don't want to be associated with that particular charity. As this claims scenario says, there was no legal claim brought by the performer. But what if that charity's mandate was seen to be very negative? was seen to really be damaging to this individual's career. We all know now how quickly through social
True.
media these things could spread. So this could have manifested into a very large legal claim, but the charity also, they would have incurred a lot of cost, commitments to cost to have this event, and all of a sudden they're out of pocket.
Yeah.
And then what you've got is an individual's, the board, the executive, very open to criticism here, because now they've cost the organization a lot of money.
Yeah, and of course, when you're dealing with charity, right? Any significant financial loss is going to be
So
devastating.
public funders, other donors, corporate sponsors could all really make an argument that they've now lost their money, their contributions, because of the lack of diligence on the part of the board and the other management. So looking at insurance, so we're done with our claims for now. Now we're thinking about how do you structure your policy, your program, and this, I'm not going to go through every single one in detail. As Grant said, you can download the deck. This becomes a very simple checklist. It allows you the opportunity to talk to your insurance providers and ask some questions about your own policy, or if you're looking at buying a policy, it allows you the opportunity to ask some good questions.
I think the last two are probably the most relevant to me, at least when I'm discussing with a new client. Is one of the common questions is what amount of insurance can we get, but also is your broker or is your insurance company specialty focused? So I know that we use very specialized focused board of directors or management liability insurers. Some of them have great experience with not-for-profits, and also their claims philosophy. That's, again, when we're talking about the claims examples, you want to know what their claims experience and details are. Are they the type of insurance company that's going to work with you and ultimately educate you as we move forward? Or are they the type, I mean, again, I don't like to disparage, but some of them may just say it's declined, denied, and then just move on. And it's unfortunate that sometimes that happens.
Well, and it's for this reason that we're pretty selective when it comes to our insurance carriers that provide the coverage. When you get involved in these legal claims, they can be pretty intimidating. And what you want to be assured of is that your insurance company is going to basically have your back, and that they're going to interpret your coverage as broadly as possible, that they understand what their responsibility is to you as a policyholder, and that they step up when you need them to. And
I think their main focus is ultimately alleviating the stress, because let's be honest, when
it's a stressful situation.
It is a very stressful situation. You could be thinking about it constantly, monetarily. It could be very damaging. So in our experience with the insurers that we use, they're great at alleviating stress and really being our valued partner when we're dealing with organizations.
And this is why as well, like when you look in the middle there where it talks about legal cost, payment allocation, and duties to defend, these are all things that will alleviate the financial cash flow burdens that you can experience as an organization when you're managing a claim. Making sure that your insurance company is going to undertake the costs of the defense, making sure that they're cash flowing that for you, making sure they're paying 100% of your legal fees. These are all things that are going to take pressure off a very high pressure situation. There's a few other things here that help you to assess your coverage. Rob had mentioned the hammer clause earlier. That's the second from the bottom.
I think it's important.
Yeah, and this is how your insurance company is going to, because you do get to points on these claims where you as an organization would like to carry on defending the claim. Your insurance company may be looking at it and saying, we have an opportunity to settle this. We think we should settle it. And you can get conflict between insurance company and policyholder for the reason that, you might feel this is reputationally important, that you see this through. It's all of these things that you're considering. What the hammer clause can do when you have a hammer clause is it means an insurance company can really dictate when that claim is going to be settled. By not having a hammer clause, which is the way we like to structure it, is that the insurance company, you don't need the consent to carry on defending it. They're going to see it through until you are prepared to see the settlement happen. And it doesn't mean you're still not going to come to a point in that discussion where you're maybe trying to pursue something, the insurance company's going to try and educate you as to the pros and cons. And we find in most cases, everybody, the parties reach an agreement where it's time to settle, and it's better to get it behind everybody. Board governance, having sat on many boards, sitting on our own corporate board, communication is key, and recording the discussions by way of minutes, those are important. Making sure the policies and procedures around the workplace are not only developed, but that they're enforced, making sure all of that's documented, making sure complaints are documented. Board members attending meetings. I'm sure we've all been involved on boards where certain board members don't show up. They're
makes
not
it very
there.
difficult.
Yeah,
Right,
it does. It does, and you know, it makes it really challenging when, you know, they may have a question after the fact. It doesn't show good board governance if, you know, 2 or 3 board members are typically not at each meeting. So you want to address that and deal with it. Mentioned it earlier, seek advice and consult with experts on complex or technical matters. Make informed decisions. Really is at the end of the day, it goes back to that duty of care. We did everything we could reasonably do. We talked to the experts, we made a decision. Unfortunately, it's not the outcome we wanted, but we did our best we could do. And I think that goes a long way when you can demonstrate it. And the documentation around that.
For sure, consulting with experts or using third-party services to educate yourselves, but also to comply with certain regulations, or at least say, this is how we came to our informed decision based on the advice of experts or the third-party services that we used. I think that that's a pretty key due diligence aspect.
Yeah, and I mean, exercising good discretion around everything is important. You know, we've talked to clients often about the fact that they might be dealing with a sensitive issue. It could be a complaint from one person to the next. Making sure that that information stays within the parties that are needing to be involved. And, you know, we had a discussion recently with a client who, you know, was dealing with a complaint. And the thing is, you know, the complainant doesn't necessarily need to know the outcome, right?
True, yeah.
It's private with the other person. All they need to really know is that it's been dealt with in the best way that the organization and the management felt it could be.
Absolutely.
And, you know, if all of a sudden it gets shared, it can be, again, you can end up with another defamation claim, some sort of discrimination, reputational issues. If you start looking at changing policies, these are good little tips to go back to. You've got to watch these policies because of the nature of them. A claims made policy essentially says that the claim must be made while the policy is active and in force. You can really affect your continuity of that coverage by switching insurers if you do have some knowledge of some circumstances which could give rise to a claim. Talking to the directors, the executives, other insured individuals in management, making sure that they don't have any prior knowledge of any incidences that could result in a claim. That's an important practice.
Yeah, I think good communication there is key, right?
And then we also, when you decide if you choose not to carry on the coverage, there's something called an extended reporting period, which gives you a longer period of continuity. And then there's also a retroactive date that you sometimes will see worked into these that will give retroactive coverage for something that comes to light. And those are always in flux. So it's important you raise those discussion points with your broker, your insurance provider, ask those good questions, and they will be able to advise you. So we do have the opportunity with, for Theatre Alberta members, we have a specialty program that's, we use Trisura Guarantee on. We've got some special premium considerations. Many of the things that we've talked about with respect to the coverages, you know, the pros and cons of coverage we have addressed. We feel that this is a very sophisticated coverage. Be the same coverage as well that would be on some of our largest arts organizations, but it is scaled to the size of your organization. It's going to look at your operating budget. The deductibles are going to be very low, non-existent except for employment claims. And the process of getting a quote and purchasing a policy is quite easy. So I'm going to turn it back to Grant. Questions?
Yes, okay. So thanks. So yeah, now we do have a couple of minutes for some questions. If there are any questions, I noticed there haven't been any questions come in so far, but maybe we'll leave about a minute here to see if there are any questions that you'd like to ask Steve and or Rob about board and management liability, or anything that that was discussed so far on the webinar. You can just go ahead and type into the questions pane in the GoToWebinar control panel.
We've covered a lot here today, and I know it takes, you're taking in a lot of this information, but as Rob said earlier, if you think of questions afterwards, the next slide has our contact information. Feel free to reach out to us by telephone or by email.
Yeah,
and
there
we'll
are
be
no
happy
stupid
to-
questions,
Yeah.
especially when you're dealing with insurance, and in some cases a very complicated matter. Right?
Yeah,
So
and
I'd
then
rather
you
my clients ask me, a lot of questions as opposed to not.
Okay, so is a resigned board still responsible for claims on an organization?
They absolutely are and can be. And so even long after you've resigned, whether you're as an individual or whether you have an entire board has resigned, you'll see that. You'll sometimes see when the going gets tough, the tough get going.
Yeah, exactly.
And so,
But the legacy remains.
but the legacy
right?
remains. So that's why, again, you want that continuity of coverage, and you do want to make sure you don't. If the decisions were made at a time when you were active as a board member, you definitely still have some liability there that could follow you for that type of claim. So I hope that answered your question.
Okay, that's all the questions that that came in. So we will move on to close the webinar. So that brings us to the end of our webinar. If you have additional questions, feedback, or if we didn't have time to answer all questions here, feel free to email Steve or Rob. Their emails are listed on the slide there. Also, consider following Front Row Insurance on Facebook and or Twitter and other social media. We are also on. If you check our website and scroll down to the footer, you can see, and we are keeping those channels up to date. So thanks to Steve and Rob for an informative presentation.
Yeah, thanks
and,
everybody for
Appreciate you joining in today.
And big thanks to Theatre Alberta for partnering with us today.
Thank you, Theodore.
The webinar has been recorded, and a YouTube link to the recording will be made available. If you check Front Row's YouTube channel, you'll see it within the next 24 hours. And assuming the feedback on this webinar is positive, we may do more webinars in partnership with Theatre Alberta in the future, so be on the lookout for those. Thanks for listening, everyone, and have a good day.
Thanks, everyone.
Thank you.